Opening Bell is sponsored by TD Ameritrade.
Start me up because the bell's set to ring. Here we go. Take a look at the CNBC real-time exchange. Here's the big board. The CEO of Interbrand releasing its 2011 Best Global Brands report. Over at the NASDAQ, the CEO of car rental company Avis Budget Group doing the honors there. We are looking at a lower open here, Jim, and you're making a good point in terms of a lot of these stocks are pricing in some very bad fall-offs in business. And if those fall-offs don't happen, then there could be upside to the stocks.
You know, I got a chance to speak to Cindy Haynes, Mark Haynes' widow. And we were talking about Mark Haynes talking about this notion of this whoosh, this moment where there's a big capitulation. If Greece has this final denouement and the banks do take the hit, that could be the event that makes it so you have something that we finally realized was out there. We were talking about Caterpillar. Caterpillar's down 40 straight points. Can I tell you, can I be a butcher block and say, hey, I'll cash that knife? No. But there'll come a whoosh moment where we will wish that we didn't, that we said buy it.
Do you really think it's going to be a whoosh moment this time around, or is it going to be a death by 1,000 paper cuts kind of thing? Because think of how long we have been talking about Europe. It has been going on for more than a year. Cut after cut after cut after cut. Do you think we're going to walk in one day and Greece will be defaulted and there's a bank that's going to be in trouble and perhaps under, and that is the moment?
I think there are multiple banks that are in trouble. Look, if there is no moment, then I'm going to default to yield and recommend that people start thinking about stocks like an Exelon, which is doing great given the fact it's not facing the EPA gun. Now, look, it's a 5% yielder that has consistent earnings. People yesterday criticized me at Jim Cramer on Twitter saying, why are you bothering? I bother because at a certain point in 2008, people made fortunes, and they did make fortunes. 2008, 2009, there was this moment that people made their lives, and I'm not blind to that.
Right. Every even bear market, and we're just about 9 points away from bear market territory on the S&P 500. There are trading opportunities, and they're different from investment opportunities. They may be the same, but they may be different.
And October has been a bottom for more bear markets. I'm not being a Pollyanna. I am telling you only that there are moments of being constructive, if only just to have a higher place to sell. Maybe today we're going to get a higher place to sell.
We actually are officially in bear market territory on the S&P 500. The level we had to cross was 1090.89, and right now we're at 1089. Marianne Bartels over at Bank of America Merrill Lynch this morning, the technical analyst, had an interesting note saying that the next support level on this market is 1020. With a 50% probability, we go to 985 to 910.
Okay.
She's, as a technician, she's slightly more bearish than some others on the street. But it is worth pointing out some of these levels that we're watching.
Right. I also want to point out that if you had any stock leadership, like an Apple that would go up 5, 6, people would say, you know what, maybe Qualcomm's not so bad. Maybe ARM Holdings not so bad. Maybe there's still a moment where tech is inexpensive. I urge people to recognize that if you are a seller in this market, you might get a better moment today to sell. I just think that you could, because I got to be a little more constructive given how oversold we are, and that we were coming in with endless declines, that even in 2008, which is now the fabled tale, there were moments to sell that were better than the vortex.
Right. You mentioned Caterpillar before. What do you think some of the resource companies are telling us by way of forecasts? When you hear Arch Coal, they warned on Friday. They had steep declines yesterday. We're getting analysts ratcheting down their estimates when it comes to copper, taking down their estimates and price targets and ratings when it comes to a lot of the other resource and metals companies like Alcoa. Second downgrade today after yesterday's downgrade.
Stock goes lower. Let's just about copper. Now, 12 years ago, we used 30% of the world's copper, and China used 10. It's now 35% China. So I just cannot be oblivious to decline in China. Is Macau slowing for wind? It seems like the rate of growth is declining. I guess what I'm saying is this is China, and we don't want to lose China a la the 40s in the United States. I don't want to be as bearish about China because we got a PMI number that wasn't so bad.
Right. We got to check in with David Faber. He's done some digging on the NYSE Deutsche Börse deal. David, what have you found out?
Yeah, well, my instincts, given I've covered M&A for longer than I'm even capable of remembering, were more or less correct. Not to draw too much into this. An objection here from the EU, and we've been through this many times, and obviously other deals, is nothing like an objection here from the DOJ. As I said earlier, just wanted to make that point clear. This in some ways begins what will be a negotiating process between the the EU and the two companies, specific, we believe at least, to the derivatives business that will be combined there, and that has always been seen as a potential problem. The key will be, what do they state are their objections, and that kind of puts down their list of this is what we think should happen, and then the companies will ultimately begin negotiations. You've sort of started a 60-day clock at this point, so we'll see. But in no way, shape, or form should investors take this in some way to mean that this deal is being stopped by the EU at this point. That is not happening right now. Yeah.
Would shareholders benefit if this deal were stopped?
I don't believe so. No.
You don't think the stock could go higher?
Maybe short term, but I kind of, in listening, I mean, aren't markets global, Jim? Aren't they truly? Isn't globalization here to stay? Can you really be a parochial sort of,
The flip side is, if there is a financial transaction tax, if that gains some steam, then a nicey Deutsche Börse could be more exposed to that.
I think that's true. I know that there are secular concerns over there that make it so I'm a little bit worried to be attached to it. That doesn't mean that this is Dow Chemical buying Roman Haas, but it was, a disastrous deal where Dow has since recovered. But I just am pointing out, David, that this was a very high-yielding, decent stock, and then suddenly it got caught up in this deal.
Yeah, well, it did. This deal being a very large one, a very important one. Ultimately, Jim, these kinds of things will either bear out yes or no over a longer period of time. You and I may very well be here to pass that judgment, but it's going to be years before we really know the answer.
David's been at it a long time. I think that's my ultimate takeaway.
Yeah.
I want to check in with Bob Pisani, who's with Carl. I know, Bob, you probably have some thoughts on what's going on with this deal as well.
Yeah, well, let me just say, there is good news this morning out of Europe, because Mr. Juncker, who's the head of the Eurozone finance ministers, has essentially come out and said, we are in the process of talking about renegotiating that deal. There are what are called technical revisions. I love that word, technical revisions.
Haircuts, bigger haircuts.
That's right, and it is not a technical revision at all, but this is how Eurozone finance ministers talk. The bottom line is the deal they negotiated on July 21st is outdated. Greece has not met its austerity measures. It is not. The GDP is shrinking much more dramatically than they anticipated. 21% haircut, which is what they're talking about to the private bondholders, isn't nearly enough. It's trading at 50 cents on the dollar, and everybody knows this. So this is a necessary step. Mr. Juncker has acknowledged that they're looking at technical revisions. So yes, they have to put it off. That's what's the problem this morning, why we're down. They're putting off getting the second tranche until they can sort of renegotiate other terms. It's a little more complicated. And yes, it increases the possibility of a disorderly default as opposed to the orderly default that they're negotiating on, in a sense. It's an orderly restructuring. But that is a necessary thing we're doing. This is very good news. They're finally starting to get real about what they need to do over there. So I'm not saying this is solving all the problems. This is a necessary step that they've had.
And everything up until now was
a little bit of a fantasy, given that the terms were outdated on the July 21st agreement. Now, let me say, did you notice banks aren't falling out of bed? The big European banks are down 2%. Why aren't they down more? Because they've already been killed in the last few days. And secondly, did you notice Dexia has been bailed out? Belgium and France, the finance ministers came out and said they would do whatever it takes to protect the depositors and the creditors of Dexia. And without getting into details, Dexia is sort of the poster child for the banks that have the biggest problem. If you talk to any European bank analyst, Dexia always comes up. Now, who knows, heaven knows, how much this might cost Belgium and France. The answer is potentially a lot. But for the moment, that's what's going on. They're backing the weakest bank that's out there.
Even though the terms are nowhere near being solidified.
We don't know. Heaven knows what it's going to cost. But that's the reason things are actually holding up a little bit better. I just want to comment on the NYSE. And David's comment is absolutely correct. A statement of objections is not a vote against the merger. It is a routine part of it. There was a 90-day review period that started in the beginning of August. It goes for 90 days. And at any point in that period, the EU can state and issue a statement of objections. All it says is, here's the stuff we're concerned about, guys. Can you give us a response? That's what it is. It's not a vote against it. Now, they've been preparing for this for a while, and there's been anticipations, and the main problem is there's concerns about cornering the derivatives market in Europe. Everybody knows this. The NYSE is well prepared to answer those objections, and we'll see how this thing works out. But a little bit of concern that there may have been some misunderstanding on the headlines that are coming out on that. Finally, just want to say something on AMR. Hey, Jim, was that a bear raid on AMR last night or yesterday, or what? Now, Rodman and Renshaw, which is a small firm, I think had the best comment this morning. They said if we would have seen a Chapter 11 coming, they would have telegraphed this to us a while ago. We haven't had any indications that's happening. That's why we're suspicious there's nothing immediately in the cards. And in fact, Rodman, again a small firm, upgraded AMR on that.
But great point. You know, yesterday you made a great point throughout the day, which is that they were going after the losers yesterday.
Yeah.
They were and I thought that was too motivated, the selling, for me to believe it was people who were trying to get out of AMR because they're worried about the quarter.
Yeah, exactly. Right. There are a lot of issues that are going on with attacking the weakest stocks in these groups right now.
Yes.
There's a lot of cynicism. Finally, could I just say, Goldman Sachs came out, Jim, and I'd love to get your comments on this. Did you see what they did? They cut their GDP estimates for 2012 and cut their earnings for 2012 to $98. I think they were at 105. One trader called me and said, this is Goldman getting long. That's what it is. I know that's a cynical comment, but that's the way the street has become these days, that up is down and down is up.
Whoa.
A lot of people noted, by the way, that this is not necessarily any indication that there's a recession coming, and Goldman thinks we're going to avoid it. I think that's true.
Right.
Bob raises good points.
Of course he does. Thanks, Bob. Thanks, guys. We got to shift to bonds and the dollar. Rick Santelli standing by in Chicago. Hey, Rick.
Hi, Melissa. Well, you know, it really is stabilizing. You know, we're a couple of basis points higher in yield than we were about an hour ago. Traders, all my emails, everything is all about equities, you know, pointing out how they're 25% lower in the major German and French stock markets. We're approaching close to 13% down in our market. You know, we have American, they have KLM. So there's a lot of issues going on, and many continue to point to the fact that, whether right or wrong, a lot of fixed income traders that are hunkering down do believe what's going on in Europe, the banks, is going to take capital away from capital expansion and harm the outlook for the economy down the road. And this seems to be a dynamic that is kind of self-feeding here in the Treasury complex as we look towards Ben Bernanke, of course, testifying this morning. Back to you.
Thanks so much, Rick Santelli. Coming up, we will talk to an executive from Ford about the car maker's agreement with the UAW. That's coming up next. Also, the latest read on the real estate market from one of the biggest voices in the business. Morton Zuckerman joins us exclusively with his views on the state of real estate. And as we head to break, take a look at this morning's early movers.
The Bond Report is sponsored by PIMCO, your global investment authority.
Position, a relentless pursuit, from oil to gold to stock indexes. At MF Global, we help you find your edge in fast-moving global markets. We roll up our sleeves and give you the insights, strategies, and platforms to trade hard, smart, and fast. Across assets and around the world, take a position at MF Global. Call to open an account today, 800-445-2000, or visit mfglobal.com.
You are a business pro. Your core competency is competency. And you rent from National, because only National lets you choose any car in the aisle and go. You can even take a full size or above and still pay the mid-size price.
I'm getting an upgrade.
As you wish, business pro, as you wish. Go National. Go like a pro.
Now through January, earn a free day with every 2 rentals. Find out more at nationalcar.com.
Most brokers see us all the same. Unwise. Unsophisticated. Children. Too naive to seize the option. It's time to trade up to Options Express, the options and futures pros, where you get the trading ideas, exclusive technology, and real live help smart traders deserve. Trade up to optionsexpress.com.
I've been riding since I was 17, flat out my whole life. Ran into a pretty serious medical issue. I was prescribed one drug one place, another somewhere else. Turns out if I'd have taken both drugs together, I'd have been in real trouble. But United Healthcare spotted the danger and warned my pharmacist in time. We only get one shot, and I want to leave this life exhausted.
We're more than 78,000 people looking out for 70 million Americans. That's health in numbers. United Healthcare.